Thank you for checking out Philman Rollup and Associates Municipal Market Update for the week of October 5th, 2020. My name is Adam Bauer. I serve as CEO and President of Philman Rollup and Associates. Philman Rollup and Associates is a municipal advisor to government. On our first slide, we're showing the municipal market data yield curve. That's the red line on October 2nd, 2020. Those tan bars represent the high and the low of interest rates for each one of those maturities. So you probably noticed that we're near the low on those, and that helps signal that we are at pretty historic lows in interest rates. One thing that has been happening, and I talked about this the last few times I've done this, is the yield curve has gotten steeper. It's not steep, but it's gotten steeper from a few months ago. And if you look at the long end of that yield curve, I've talked about that as being as low as 1.48, and now we're in a 1.63. The lowest I've ever shared with you in the 1 year is 0.11, and we're at 0.12 now. So not steep, but it has gone a bit steeper, and I'm going to show you some data that suggests that that might continue, and maybe continue in a bigger way than we've seen. On this slide, we've looked at two very good credits, the 10-year MMD and the 10-year US Treasury. And typically, not typically, when markets are feeling comfortable and aren't too concerned about taking risk, you'll oftentimes see the US Treasury have a higher yield than the comparable municipal AAA. And one of the key reasons for that is the municipal has double tax exemption. Investors oftentimes don't have to pay federal or state income tax on the interest, whereas treasuries, the states don't charge taxes, but the Fed still does. And so if you think both are comparable, you're going to require a higher yield on treasuries. Now, in times like now, where there's a lot of uncertainty, it's not uncommon where that flips, where investors say the federal government can print money, treasuries are easily traded. Everyone knows US government, where some don't know the individual names of municipal bonds. And so sometimes those are harder to trade. And so typically, not typically, in difficult times, you'll see that the MMD will have a higher yield than the Treasury. And you're seeing that basically since March. This chart, monthly inflow in municipal bond funds. So this chart doesn't quite capture it because the data came out so late last Friday. But we did see an outflow from municipal bond funds. So this is the demand. And when you see less demand, that's upward pressure. When I shared with you 2 weeks ago, one of the things we had talked about was that did happen for the high yield funds where there was an outflow. But now we're seeing it for all categories of municipal bond funds, an outflow as an aggregate. And so that means we have less demand for bonds this week than we had previously, and we have a lot of supply coming. I'll share that with you in a moment. Here it is, supply. So when you look at those bar charts, you might just say they're all kind of high compared to those dotted lines. But those three dotted lines represent the average weekly volume for the last 3 years. So to be blowing past those almost every week, 9/7/2020 we did, but to be blowing past those averages in all these weeks that we're showing here, that's significant. And then to be blowing past it in such a big way, I think that's even more significant. We have a lot of supply coming to market. So I've just shared with you, we have less demand, less money flowing in municipal bond funds, but we have more supply than we've had. That's upward pressure on interest rates. And here we tried to show that. I'm blocking you on the breakout chart, but what we're doing here is just showing the MMD for the 5, 10, and 30 year. And you probably don't notice it too dramatically, but it started to trend upward on the right side of the graph, which is most recent. We tried to do that breakout chart there to show. In August, that week of huge volume, right after that, you start to see rates go up in a pretty big way, not taper off, but just stabilize, and then go up a bit more again. This will be interesting to see if this continues, and we'll continue to show that breakout chart if it does. I have not shared this chart with you. Okay, so to the right, we're showing volume up in billions, and then to the right, we're showing is a spread. So I haven't really talked to you about spreads too much. So single A bond is going to have a higher yield than a triple A bond. Double A is going to have higher than triple A as well. But what we do here is we take the single A credit and whatever interest rate is required for that, and we subtract the triple A. That's the spread to AAA. And when that spread is narrow, investors are not too concerned about risk. So look before March. Investors weren't too concerned, right? We're right on less than 100 basis points between a single A and AAA. And that's skipping double A in the middle of those. So you can see very tight spreads. Then March comes around and we saw quite wide spreads. Now, I've talked to you about how treasuries dropped in yields very quickly. The Fed lowered the overnight rate, treasuries went down very quickly. That doesn't always mean that taxable municipals will follow, and they didn't. And they, in about June, they started to, but not to the full degree. But you saw rates trend downward, and then you saw it being pretty stable. But go to the far right, and you see that upward tick. I think what you're seeing here is a whole lot of volume of taxable municipal bonds available for investors, less demand for them, and now the interest rate has gone up. We'll have to continue to monitor this and see if this trend continues. Economic calendar, as I told you in the past, in 2020, COVID-19 infection rates, how the economy is going to do, the election, all those things are probably going to weigh much heavier than a lot of these things unless they come in much different than expected. Finally, I want to thank you for your time again. We have the Film and Roll app registered municipal advisors listed here. I encourage you to reach out to any of them in the meantime. But if you get a chance, we hope you check us out in 2 weeks. And thank you for your time.